What's up, you guys? I'm Dan. This is Frugal Not Cheap. Tesla stock tanked 65% in the year 2022, so I bought more. Hey guys, so first off, Happy New Year. Hope 2023 is off to a great start for you. If you're a long-time viewer, you'll know that I am not only a Tesla owner, but also a Tesla stockholder. Back on August the 16th of 2019, I bought 6 shares of Tesla using a little bit of birthday money. I invested $1,323.93, and that investment performed ridiculously well through the end of 2021. There have been a couple of stock splits. There was first a 5-to-1 stock split, and then we also got a 3-to-1 stock split after that. So my 6 shares became 90, and my original purchase price, once we adjust for that split, was $14.56. At the peak, these shares were worth almost $415. So you can imagine, this account balance went up from around $1,300 to almost $40,000 at the peak, essentially paying for the car that I bought. 2022 was not a good year for stocks. In fact, it wasn't a good year for bonds at all. It was just pretty much a bad investment year. But Tesla stock did fall much more sharply than even the NASDAQ. It fell to a low of over 69% and ended the year down around 65%. On December the 27th, though, I had, my car had driven me to the Tesla service center here in Plano for a service appointment. I was getting a little bit of work done on a squeaky joint on my suspension. And while I was sitting there, I noticed a couple of things. One, the stock had dropped by 69%, so in my view, it was severely undervalued at the time. Second, my car had just driven me there using FSD Beta, which was really cool, but also says something about the long-term prospects in terms of profitability for Tesla and their vehicles. And third, I took a look at a chart of short interest and days to cover and saw that there was less than a day, actually about a third of a day, in terms of days to cover. And so I figured it was probably going to be a relatively good time as any in order to invest some dry powder that I had on the side into Tesla stock. So I should put a caveat that, of course, this is a very small part of my portfolio where I'm just kind of taking some fun bets. In general, I don't believe in stock picking. I also don't believe in market timing. But this was just one of those things where, hey, I had some dry powder. And, prices were very low in my view, and so it seemed like a good idea to buy. Now, these shares were much more expensive than the original ones I bought. Again, my original shares were on a split adjusted cost basis of $14.56 a share. The shares that I bought on December the 27th were at $110.16 a share. So they're way more expensive. But still, I do feel like over time, the company's still undervalued and that those shares will appreciate and it will be a good investment for me. So why do I think that? Well, there are a number of reasons, but one simple way is just to look at the basic fundamentals of the company and see how it's performing. In fact, I'm filming this on January the 2nd, and the 4th quarter numbers for production of Model S and X and Model 3 and Y for the 4th quarter of 2022, thereby giving us the full year 2022, just came out this morning. Before we address those though, because obviously I didn't have those numbers when I placed my buy order on the 27th. I only had the numbers through the 3rd quarter of the year, and then of course, insurance data and some other indicators for the 4th quarter, but essentially just the numbers through Q3. So why don't we look at the financials and compare them to 2021. So just looking at the basic top line at revenues in 2021, Tesla had revenues of $47.2 billion. For the period of the 1st quarter through the 3rd quarter of 2022, revenues increased to $57.1 billion. Assuming that 4th quarter revenues were equal to 3rd quarter revenues, which is a very conservative estimate because they're actually in a growth period right now, so revenue should be climbing, we'd end up with $78.6 billion in revenue for 2022, and that would be a 66% yearly growth rate over 2021. Meanwhile, operational expenditures went from $7.08 billion in 2021 to an annualized $7.02 billion in 2022, assuming again Q4 equals Q3. So that would actually be a 1% decline in operating expenditures as Tesla continues to find ways to be more efficient and lean. CapEx did increase, but of course we're ramping up factories both in Giga Berlin and Austin, where the giant casting machinery from Idra in Italy has finally arrived in order to make the Cybertruck, and also a bunch of robots in order to make Cybertruck as well. And then of course the Shanghai factory is expanding, and there's more work done at Fremont as well. But despite all of this going on, CapEx only rose from $6.48 billion to $7.1 billion, or about 10%. Business operations led to free cash flows of $5.05 billion in 2021, and this would conservatively grow to $9.44 billion in 2022. That's an 88% increase, and again, very conservative, assuming that Q4 is equal to Q3, which it won't be, it should be better. Lastly, as we head into what many are thinking is going to be a recession, nobody knows how steep or shallow it's going to be. We can look at how much cash on hand Tesla has in order to weather the storm. In 2021, they had $17.58 billion, and it looks like they should come into 2023 with at least $23.3 billion. So that gives them a pretty major cushion in order to deal with any kind of issues that are coming up, and in order to continue investing prudently, even if they're facing some headwinds. So those are just the financials, and they look very, very solid for me. Why don't we look at the actual fundamentals of production? In 2021, they refreshed the Model S and the X. That's sort of their new Palladium model with the landscape orientation screens that have the ability now to play all kinds of video games like The Witcher off of Steam Deck. Cyberpunk as well. Anyway, so production of these was very low in 2021 at under 24,000. Historically, we used to get about 100,000 or so S and X combined, and we did ramp towards that here in 2022, reaching 71,177 units produced. If we analyze the run rate from the fourth quarter, we end up with 82,152, which is still under that 100,000 mark, but still a significant improvement over 2021. That's 192% growth. Now let's look at Models 3 and Y. Of course, these are the larger volume sellers, especially the Model Y, which was the best-selling car in Europe recently. Tesla produced 906,032 of these in 2021, which grew to just under 1.3 million in 2022, with an annualized run rate in the fourth quarter of 1.68 million. And so we have 43% year-over-year growth. And we can expect continued growth here in 2023, as we have yet to reach Tesla's stated installed capacity. So they have stated that installed capacity as of the third quarter for Model S and X was 100,000, so we can still grow from the 80-some thousand to that 100,000. And then for Model 3 and Y, they've stated installed capacity of 1.9 million units a year, and so we have room to grow from the current 1.68 million run rate. I personally think they may be sandbagging these numbers a little bit, and that the target should be more like 2 million vehicles or more for 2023. Now look, it's not all roses. There are some indications that Tesla's brand has suffered a little bit from some bad PR in China. A lot of this were sort of manufactured claims that really had no substance behind them. But unfortunately, these things still have an impact if people don't always look and see what the reality is. That's something that happens here in the States as well. There are a lot of those news stories that say that someone on FSD or autopilot crashed their car. And then, we go and look at the data later on and find out that no, they were just hitting the accelerator, right? There wasn't any unintended acceleration. But you don't usually get the same amount of press for these corrections as you do for the original story. And so the general public that doesn't look into this stuff as much as, someone that really looks into the stock and the news all the time like myself, they get the impression that these things are happening, unfortunately. On top of that, in China, we have a lot of economic headwinds and the COVID situation as well. So we'll just have to keep an eye on how Tesla does in China. They can, of course, export a lot of those cars made in Shanghai to other places. So we shall see, but I think long-term prospects remain quite strong. They can always reduce prices as well, especially because their cost of goods sold at Shanghai is really quite low. In fact, overall, Tesla has margins of approaching 30% as their automotive gross margin, compared to more like 15% for BYD, their main competitor in China. In other words, they have room to drop prices, cut margins, but then maintain and grow market share if necessary. Here in the US, I really have no demand concerns. They reduced prices at the end of the, leading into 2023, because in 2023 there's a $7,500 EV tax credit, which of course is probably incentivizing people to hold off on ordering a Tesla at the end of the year with that tax credit right around the corner. But Tesla instead offered a $7,500 discount if you could take delivery before the end of the year, and additionally 10,000 miles of free supercharging, and this really incentivized a lot of orders. People took them out of existing inventory, and existing US inventory plummeted down to zero or near zero. So not really too worried about US demand. There are some kind of hinks with the which vehicles at what price cap are eligible for the EV tax credit. Basically, IRS put an $80,000 limit for SUVs. SUVs are classified as vehicles that have a gross vehicle weight of 6,000 pounds or more. So that includes passengers and cargo, different from curb weight. And so oddly, the Model Y 7-seater qualifies as an SUV because of that, because the additional 2 seats mean an additional 2 passengers of weight. Whereas the 5-seater Model Ys do not qualify for the 80,000. They would qualify if they were sold at $55,000 or less. So we'll see what Tesla does with that. There may be some tricks that they can play with, or they, maybe there can be some lobbying to try to get this changed. We shall see. But either way, some headwinds for Tesla if they can get, to the extent that they can take advantage of this tax credit for Model 3 and Model Y. Now, there's this perception that Tesla is really just a car company, and they're definitely not. They're a hardcore, technology and engineering company, and so there are a lot of other business lines. One of the big ones was the energy storage business. They built up a factory in Lathrop, California, and this thing is set to produce some 40,000 megapack. This is a huge increase over their previous run rate. And so this could really help with their storage business. In 2021, the storage business accounted for 3,992 megawatt hours. That grew to 4,079 for the first 3 quarters of 2022. And based on the Q3 run rate annualized, we're looking at 8,400 megawatt hours. But again, the new factory should increase that significantly. That all came online in Q4. And we should get more numbers on that when we have the 4th quarter earnings call. The solar business should also ramp up at some point, but wasn't doing all that great in 2022. From 345 megawatts in 2021, we grew to an annualized rate of just 376 megawatts for the first 3 quarters of the year, for Q3 annualized in 2022. But still, both of these two are lines of business that could be set to grow quite substantially in the future. Looks like prospects at the moment are brighter for storage than they are for solar. I do hope eventually they'll figure out the solar glass roof and how to get those installed at scale across the country. As I talked about earlier, though, there are new products on the horizon. We have the capacity coming in for the Cybertruck. We also saw the first deliveries of Tesla Semi to Pepsi Frito-Lay at the end of 2022. Sometime they may actually release the new Roadster. We shall see. But then 2 other really big ones are, of course, FSD. And then also kind of related to that is the Optimus robot down the line. Both of those things could be ridiculously huge for the company if they're able to make them come to fruition and execute. So we shall see. I think the future looks bright for Tesla. I'm happy to continue to be a Tesla shareholder. Not financial advice. I don't know if the timing I bought was right. There may be a further bottom or what have you. But anyway, just want to let you know an update on my portfolio and why I made that decision and how I feel about the company. Hope that's helpful for you. If you enjoyed today's video, do please hit the like button and consider subscribing. Thank you very much for watching, and I'll see you in the next video.